Welcome everyone to this week's Advanced Financial Update, where we're going to be talking about California legislators' proposal of two tax bills that will attempt to increase the wealthy. We'd like to invite on our speakers, Edward Schuh, the founder of Inception Financial Services, who's an engineer turned financial advisor. Welcome, Ed. And
thank you, Robert.
Brian, you're very welcome. And we'd like to welcome Brian Walker, who is the president of the AFI Group, an entrepreneur and financial advisor. Welcome, Brian, to today's episode.
Thanks, Robert. Good to be here.
We're going to also introduce James Haynes, who likes to go by Jim. He's a certified public accountant with a master's degree from USC. He's worked for large public firms in both audit and tax departments. He's worked as a controller and as CFO. He has experience in many types of industry, including real estate, development, construction, low-income housing, tax credit, and property management. If that's not a mouthful, but welcome, Jim, to this week's episode.
Thank you very much. I appreciate it. Glad to be here.
And Robert, I just quickly wanted to say that those two bills are intended to increase the tax on the wealthy, not increase the wealthy in California.
That is true, and did I misspeak?
So you wore me out with that mouthful about Jim. I mean, I'm sweating. You're tired, dude.
Yeah, well, we wanted to give Jim all the credit is due, but Brian, I wanted to thank you for lending me your skybox today. I'm enjoying the view.
Well, you know, I just charge a marginal fee, so hopefully the government doesn't tax me on what I charge you. Hint, hint.
And California will.
Yeah.
I'll consider it a gift. Are you part of my family? Do I get to give you a certain amount for free?
Of course.
Mm-hmm.
I am family. So, but Jim would be the one to give you the official answer on that one. He's the CPA.
All right. We'll write it off as a business expense.
So let's jump in, gentlemen. We're talking about really tax increases that are being proposed under the guise of taxing the rich. They're in order to help meet the shortfall that's been created by so much stimulus and the fallout of the shutdown and the coronavirus, of course. Jim, let's start with you with Assembly Bill 1253, if you can give us just a quick summary.
Sure. 1253 is a tax increase that the California State Franchise Tax Board has decided to, the Senate, I should say, the Senate has decided to increase taxes on anyone making in excess of $1 million. They've broken it down into three separate categories. Depending on how much you make will depend on how much you end up having to pay. And as you know, their goal has always been to tax the rich, which is exactly what they're going to do with this particular bill. And they're expecting it to raise, in excess of $5 billion, and it is backed by several of the government unions, as well as the Teachers Association and some other special interest groups that really want to see this tax pass.
Yeah, and it seems like when they package it this way that, it's a great idea, let's tax the wealthy, it won't affect the middle class. But Brian, talking about the impact, there seems to be two different lines of thinking. There's many leaders that are concerned that it will create an incentive for successful people in California to leave, although former Governor Jerry Brown continues to say that wealthy people will stay in California anyways because of the beautiful weather, despite the high cost of living and, of course, the highest taxes in the country. So just wanted to get your feedback.
Yeah, I mean, this is an interesting subject and not a very popular subject. I'm going to say something that might offend a lot of people here.
Offended, Brian.
I'm sorry, Eddie. I already offended you, and I didn't even make my statement. So I rest my case. Now, here's the deal. Whether you're rich or poor or in between, how many people want to take a salary cut or a pay cut? Most people I know don't want to. So that's ultimately what you're doing to the wealthy. When you start increasing taxes, it's going to make their take home be smaller. And most people don't want to do that. So these wealthy people have a team of advisors and CPAs and attorneys that are going to help them figure out, hey, how can we save the most of your money?
And do you think that it will also encourage business owners to take their companies and their jobs with them as well?
Yeah, definitely. I mean, we've already seen it with Elon Musk and Tesla, right? We have Tesla here in California. They were shut down due to coronavirus, and he was pretty upset about that. And he was very vocal. And next thing you know, they're open. And how did he get open? He threatened to move Tesla out of California. So there goes jobs, there goes tax revenue, there goes a lot of good things moving on to somewhere else in America.
Yeah, and Ed, they also in the bill mentioned that the legislation would be retroactive. Can you help clarify what that means?
Yeah, sure. I mean, to me, it's just a clear sign of the desperation for how much they want to get their hands on these funds and this money. Instead of saying, okay, let's move forward and just start January 1, 2021, in which case they would have to wait until 2022 before they're really going to get as much of that revenue. I mean, they would likely get, tax payments along the way, but still, by going retroactively to January 1, they're going to get a lot of that tax revenue over the course of this year and into the tax filing season for next year.
And so, Jim, and that's legislation or the Assembly Bill 2088. Give us a quick summary on that, and then we'll talk about how residency maybe play a huge role in this piece of legislation.
This one is rather interesting because 2088 basically is the first time in this country that any state has tried to enforce a wealth tax. Now, that is not based on income. That is based on assets, and it's assets worldwide, not just what you have in California. So if you have accounts in the Caribbean, or you have a business in England, something like that, that is all part of the assets. So even if you move, you're still going to be affected by the wealth tax. Now it's going to be a 0.4% tax on any assets over 30 million. That will affect about 30,000 residents in the state of California and generate about $7.5 billion to the coffers of the state. The other real, in my view, huge downside of this is that they can retroactively do this for residents who were residents for the last 10 years.
Yeah.
So
yeah,
people that have tried to leave the state for this reason can still get caught in this net. It's horrible in my view.
Yeah, Brian, and I know you said the exact same thing. The constitutionality of that type of law would definitely get challenged. But I also wanted to talk to you about going back to your previous point. You add the wealth tax on top of the tax rate increase, and now you're talking about hammering those who make $1 million and have more than 30 million in assets times 2, which is creating twice the incentive for them to consider leaving the state.
Yeah, I mean, it's almost like it's a crime to be wealthy. I mean, look, these taxes don't apply to me, okay? I don't have over $30 million of wealth yet. I don't make over $1 million yet, so I'm not going to be affected by these tax rate hikes. But I think we can all agree that it's going to have an effect on everyone. And why in the world would anyone with any type of wealth want to be in California? I mean, that's why people come to America to, like, live the American dream. They want to work hard. They want to accumulate wealth. They want to have the job that they want, or be successful, or have a house, or whatever it is. And now all of a sudden the government made you a criminal and said, hey, because we spend money like crazy, we're just going to tax the rich even more and take from them, because that's not fair. You know, I mean, I'd love to challenge these people that say, hey, let's tax the rich more. They're not paying their fair share. I'd love to challenge and see what their day looks like. How are they spending their day compared to those people that have accumulated that type of wealth? I mean, there's a reason they have it. Some of them inherit it, but some of them work awfully hard and sacrifice a lot to get there.
One thing that I would say as well is I want everyone to think of some of these temporary taxes that we voted in over the years. How many of those have gone from being temporary taxes to permanent taxes? Just about all of them. So here's the thing: if you think California is going to be satisfied with just the money they get through increasing the top bracket, through establishing this wealth tax, that's crazy. They're not going to be. And where's the next stop? Because they will have already taxed the wealthy so substantially that we'll likely see a migration from the state. And what's the next step? Taxing the rest of us even more.
People said this is not going to affect me because I don't have a wealth of over $30 million. That may be true. I'm also one of those that I don't have that. However, understand who these people are that do have those types of assets. You've got a lot of the tech giants, you've got Zuckerberg and so forth, who all have those types of assets and plus. Now, they run companies. If they can move, and as I said earlier, we can run business now from anywhere in the world. So he could easily they can move Facebook or Twitter or Apple or whomever over to, say, Detroit, which is what I would recommend they do, because that way it benefits the city of Detroit. Move them over to another state, and a lot of those administrative people are going to lose their jobs unless they want to move to Detroit. So although we say it's not going to affect me, it is going to affect all of us, because there are some people who work for these companies that are going to lose their jobs if these companies move to another location.
Yeah. Hey, Jim, I'm going to say something else that a lot of people don't like: trickle down, right? That's it.
Yeah.
What you just talked about was a direct example of trickle down, right? It's going to affect everyone. Even if you're not that wealthy individual, it still can affect you in some way, or the cost of goods are going to go up as well. I mean, that's another indirect or direct response to taxing the rich more.
Agreed. And unfortunately, the legislators in this state don't believe in trickle down. They poo-poo everything that President Ronald Reagan did with that. So they don't believe in that. They don't think it really works. We're going to find out.
Yep.
Well, it always seems like those who do not have substantial wealth seem to be okay with it because they're removed from the consequences, or the consequences are delayed. And so it'll be interesting to see how it all plays out. The election is going to have an enormous effect on us for sure. That's why Brian and Eddie, you got taxes in retirement, because as people are approaching retirement, there is no more vulnerable time to be hit with higher taxes than when you are trying to retire. So if you would like to participate and join one of their taxes and retirement webinars, feel free to click on the link below, and they teach those once or twice a month, and you can participate in that. You also can follow them down below. You can subscribe to the YouTube channel. Before we wrap up, Jim, why don't you go ahead and give reference to also your company and services?
My company is named Haynes and Associates. I am the managing member, and we are located in the city of Tustin in California. And we handle tax work. We handle all business types of consulting and so forth, business, personal, and so forth. So if you have any questions or you want to know anything, by all means, look us up, give us a call. Our website is HaynesAssociatesCPA.com. Go to that website. It has a phone number. We're very easy to find. Feel free to give me a call. We don't charge a phone call. So if you want to talk to me, I'll gladly talk to you, and you won't get a bill a week later.
Fantastic. We'll put your contact information in the links below in the description. So if you'd like to reach out to Jim, you can also use that as a resource as well. Again, thank you everybody for taking the time today to contribute to the conversation. Of course, it will be ongoing, and we'll be watching what happens with the elections and helping all of our clients adapt to the ever-changing environment of taxes in the state of California. So again, thank you everybody for joining us. We'll see you next week.
Thanks, Robert.
Thanks, Robert.
Thank you.